Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Tuesday, the 27th of November. One of those days that you're going to kind of look back on in the market and probably not remember at all. Very uneventful day for the most part here today, as you know, we just kind of continued overall a little bit of the momentum that we established yesterday, but nothing really too dramatic. No major turn of events, at least from a technical point of view, at least to me. So looking ahead to tomorrow, we do have a couple of S&P 500 companies reporting earnings in Tiffany & Company and SJM Smuckers. They are reporting before tomorrow's open, so it'll be interesting to see. I always like the companies that report at weird times. I always think that earnings season should be January, April, July, and October. And anybody who doesn't report in that time period is weird. And that probably makes me the weird one. But I'm always interested in seeing how stocks react in the non-earning season for their earnings. So it'll be fun to see what happens over there, but nothing, tremendously large or anything along those lines. As we take a look at the S&P 500, we were able to push up off of yesterday's momentum. And for what it's worth, we did take out, that previous swing low that could have potentially, and at least yesterday, and I guess it would have been Wednesday, acted as some short-term resistance. So we did show some upward movement, not a ton of changing technically, but at least a little bit. We did kind of close right at the top, right as we ran into that 9 EMA. That kind of acted as resistance for us. I think something that's really interesting that I noted here today is over in the S&P. It looks like we actually, we kind of know that support, maybe a double bottom, potentially a double bottom. Maybe some people are looking for a double bottom at that support line, right? If you look at the hourly chart, we actually can see that we have that pattern develop as well. Now, again, I don't want to get too crazy or anything like that by any means, but we do have that double, or I guess this would be a triple bottom potentially on the hourly chart, where we actually were able to break out here today. So looking like there's a little bit of strength in there. Now, obviously, this is just an hourly chart. We still have lots of overhead, but it has to start somewhere, right? For me, I continue to think that the support level is where we should be keeping our eyes for the most part. Clearly, it's an important level on the S&P 500. Over in the NASDAQ, again, kind of ran right up into that old support level / that 9 EMA, closing positive, so we are continuing that momentum as of right now. But again, unlike the S&P, where at least I can see some technical arguments. I'm not saying that you should make them or that you should buy in on them necessarily, but I do see some technical arguments from a bullish perspective, at least aggressively speaking. On the NASDAQ, of course, it can go up. If the market rallies, it likely will go up. But I don't think you can make the same technical really, I don't think you can have the same technical argument there, personally. So I will continue to kind of look at this as my potential, overall bearish watch list, whereas things in the S&P will be more my potential bullish watch list. And that's kind of how I've been operating as of late overall. So nothing really has changed there. We'll see how we react. If we can close above these averages, there is some room. If we can get a clean break here, one nice thing I guess you can say about the NASDAQ chart is if we can clearly take out this, and I don't think I would argue that we have, but if we can, there really isn't a lot of resistance for a ways. So, if the market wants to run and the NASDAQ's able to push through, I could see some upside in there in the very short term personally. Just don't really trust it. So I don't like that chart and not by any means. Over in the Dow, working our way back up again, kind of rallied with everything here today, working our way. We have a little more room until our short-term averages start to get hit. Obviously, I'm going to be watching this old breakdown point. We watched this together as a potential support zone, and it really tried until we had our gap down. I think that's going to be our first real challenge, personally, from a technical point of view. That is the challenge area that I will be looking at over in the Dow Jones. And then the Russell, they were not able to follow the market here today. All of our other indexes were able to close up. Russell was not able to do that, showing a reasonable amount of selling, almost down 1% on the day by the time it was all said and done. I think going into tomorrow, let's see how it reacts. We've started to develop, we know that we've got really, not much going for us, but we have bounced off of support, right? We've not broke any resistance yet. And to me, at least, that is very important, and it always will be. But let's see what happens if we pull back. If we pull back, and I expect that there's a good chance that we're going to, if we can get some downward momentum to start tomorrow, maybe get some bears triggering in on that chart. Let's see if we can, test the support or create that higher low, then take another run at resistance. That would be, from a bullish point of view at least, lovely. Now, again, that's not happened. I always like to think ahead, of course, but that's clearly not what's happening right now. I think you really, unless you're banking on support holding here, in which case you probably already bought into the Russell, you're probably, from a buying perspective, waiting for it to pull back some or give you some stronger signals. So, for me, I continue to be in the same general camp I've been, for the last few weeks, where, on the bearish side, it's the NASDAQ, it's the Russell. On the bullish side, it's the S&P, it's the Dow Jones. Obviously, there are things that we can do, individual stocks within those indexes the other ways, of course. But generally, that's how I continue to look at things personally. Shifting gears over into our materials, it did breach that support level that had been kind of hanging out with, that we've been watching together as of late on the intraday, kind of rallied back up and closed right there, where I don't think, I would say that it's, it broke that support. I would definitely say it breached it. But without the close there, I will just kind of look at it and say, well, tomorrow's going to be important. If we see downward movement and take out today's low, I could see a bearish argument. And at least until we got back above that point, I would be looking at it, bearish or not at all. Personally, if we are able to break through, show that upward momentum off of this support level, I'll just call it what it was, at least at that moment in time, an intraday breach. So, I think tomorrow is the day that it will give us maybe a little more clarity within this sector. But I could see an argument, if we do take out today's low tomorrow, for going bearish into a chart that looks like this. I really wouldn't fault somebody for looking at it that way. I know that's how I'll be starting to look at it myself. Over in the energy, we continue to kind of smack our head now for the second day in a row, testing that old support level as resistance, as we expected it to do. That's likely just going to be hard to break, right? We don't know the future, but we do know that that does present a challenge. We're getting, those short-term averages, especially that 9 EMA closing, getting closer and closer and closer to us, and that always applies, in my opinion, at least a little bit of pressure. We probably still have another couple of days before we catch up, I would guess, just by looking at it. But it's going to have to make up its mind pretty soon. Some downward movement, I could see an argument to go bearish. I really could, if it breaks today's low tomorrow type of stuff. Now, again, everybody's individual trading rules would come into effect there. Some people might get in 10% of an ATR below today's low. Some folks would want a clean close and so on and so forth. But this is important. Any downward movement, I do think can be seen as a bearish opportunity. If that's a little too aggressive for us, and understandably so, don't need to be crazy aggressive, in my opinion. We can also look for it to kind of take out the low down here. Let's see how it responds. Obviously, everybody's going to do what they think is best, but I'm very interested in seeing how we, how we react. Because hey, we can hover here for a little while, but sooner or later, it's either going to have to break back above and look like a failed breakdown, or give it up and give us that sell signal. This pattern, I'm always looking for the sell signal first, because that's what my expectations are when it comes to this particular pattern. Should be interesting, no doubt about it. As we look at the financials, kind of just a day, I mean, not really much to report over here. I guess technically carried on yesterday's momentum, but not by much. There are definitely stronger areas today. Not really for me, at least. I continue to look at it the same way. This is my line in the sand from a bullish point of view. I'm potentially open to both areas, but definitely as long as we hold above here, I am open to bullish trades personally within the financial sector. Like to see it get through these averages. It kind of stuck in a little bit of a pinch here on these short-term averages. Like to see it maybe be able to push through that now 2 days in a row, then kind of being where we end the day. But really, for me, I think 26 is really the number that really matters to me the most right now. in this area. Again, the problem that many areas have, and whether you like financials or don't, you're seeing this in all sorts of charts, whether it's from a sector point of view or an individual stock point of view, is they just have lots of overhead, right? There's just lots of overhead resistance, whether it's moving averages, previous swings, things like that. I mean, there's just a fight, right? That's why it's so hard to immediately recover. When you go into those downward moves, you just have to break resistance level after resistance level just to get people to believe in you again. Over in the industrials, we are again, now we're a week into a week of trading at least, of consolidating basically between the breakdown point here and our old support level. I'll just try to straighten this one out. Our old support level back here. Right now, I think you look at it, is it sideways and it doesn't quite know what it wants to do. I think you could make an argument really on both sides to go bearish if we break to the downside, or potentially go bullish if we break to the upside. I think we need to come out of that range before we think about doing too much personally, but I could really see, if I'm a bull and open to bullish trades in this sector, I could see that being a potential opening. And if I'm a bear, I could definitely see a break of support here being a potential opening too. So I wouldn't mind it going sideways a little bit longer, let that pattern develop a little bit longer, but of course it's going to do whatever it wants to do. So I'll be watching these two areas, from a potential, signaling point of view, whether it's enough to trade or not, we'll have to see and apply our own rules. But a break above here, I would look at that as a bullish signal. A break below here, I would definitely look at that as a bearish trading signal. Over in tech, NASDAQ had a decent day, nothing crazy, but closed up on the day. The tech sector is responding, okay. It's nothing crazy, but it was really beat up. We've yet to have any challenges, right? We haven't made it even to the previous, swing low, the support level, even to the short-term moving averages. So there's still plenty of overhead here. I don't like it. I wouldn't be bullish on a chart that looks like this. Sometimes I'm going to be wrong for saying that. I understand that. But, for this type of a chart, I'd like to see it work into this and look for some bearish opportunities. Rally up for a few more days, start to show some downward momentum, and let's see where, how much conviction these bulls who have had a good run over the last, week overall, how much conviction they have. Again, it's one of those, you have to break resistance for me to even think about believing in you. And tech's just got a little bit to do before that happens. Over in staples, definitely finally was able to carry through. It's been trying to establish support. It tried, way up here. Of course, it's been kind of dancing around that 50-day moving average last few trading days. Today was the day, right? Today was the day that money was willing to come back into it. Interestingly enough, kind of closing right at that top, that old resistance level. Let's see if we can continue some upward momentum. That would make me feel a lot better. I mean, obviously, if I'm in staples today, I love it. It was a very nice movement up almost 1% on the sector ETF. If I'm not, let's get through that resistance just to make sure it's not in the way, because it might be, right? We've seen it many, many times before. But really, support to me is down here. As long as it stays here, I will be, looking at this through bullish eyes. I could understand why people got in yesterday, today, waiting for it to break tomorrow. So I do like this sector overall. There definitely are some interesting bullish opportunities out there that I've noticed within the sector. And I'm not the only one, right? So utilities, much like yesterday, it's one of those things. They don't really do anything, but they do keep it interesting, working our way back up towards the top of that trading range at 55s, and then again at 55.50 approximately within the ETF. Again, I can't really say anything different than what I've said many times before. And to me, I would look at it with a bullish bias, but it really needs to cleanly break. And that just, one day it's going to be exciting when we actually see a clean break. That day is not today, to me at least. We're right back at the top of that trading range. I'll expect it to struggle because, well, that's just the easy call, right? That's, that's the safe bet. Who knows what'll happen, but history definitely says it's about to run into a little bit of trouble. But it's definitely been an interesting run on utilities. Over in the healthcare sector, really strong day over in healthcare. One of our biggest percentage movers ETF-wise here, as it's approaching now, what is it, 50-day moving average. We've got a few different areas to be keeping an eye out for. We have the 50-day moving average, our swing back here, our resistance level back here. But a lot of, momentum, today at least, a lot of money moving into that sector. And again, I don't think this is just a me thing. It's just technically it's just held up better than other areas, regardless of what your opinion of healthcare or the healthcare sector is. I think you can just objectively say that the chart has just held up better than pretty much all of our other stuff. Not necessarily staples, maybe not even utilities or real estate, but definitely, those are kind of those more defensive type of areas. And I don't know that I'd consider healthcare to be that personally. Really not much to say here. Continues to show well. Again, as long as 89 holds, I will be open to bullish opportunities within this sector. I think you can be looking to move into the sector, depending on how aggressive you are, on an individual stock by stock basis. I still think the best signal is way up here, which I don't expect us to shoot right up, and break right through. But, I don't know the future. But I do think still the best technical signal would be a break up here. As far as if you weren't playing off of support at least. But I think you could make a case to buy it as it broke above this level. If you were a little more aggressive, I think you could even argue to move into it, off of today's momentum. I just wouldn't make that argument personally. But I do continue, to like this sector, and I'm certainly looks like I'm not alone there. Over in the discretionary, we were able to build off of yesterday's momentum, but again, it's one of those. How do you trust a chart that looks like this if you're a buyer? I don't. That really that simple. Watch. We've got lots of levels ahead of us. We kind of close right above that 9 EMA. Wouldn't be surprised to see if we can run up a little bit more. But we've got multiple levels of resistance above us. For me, I want to see a pullback. I want to see a higher low, and then I want to see it break whatever resistance level it ends up pulling back from. So if this were to happen, tomorrow we start pulling back, pull back maybe the rest of the week, start moving back up, and then take out what ultimately ended up being the high. That could be a signal, a buy signal I could get behind. Obviously, we've got to start moving down and get some people willing to put in a higher low in the first place, right? Because I also would look at this as a really good opportunity for a bearish retracement, because until that happens, I don't think you could make a great bullish argument for this sector as a whole right now. And again, individual stocks, I do think you can make some cases for it. Broadly speaking, though, I think the sector's got a lot of work to do before I'm on board. Over in the real estate, finally kind of carrying through. We've been bouncing off of that 20 for 3 trading days in a row now. Actually, we're able to kind of follow through. We've kind of seen some back and forth type of days up until today. Of course, here today, closing up about 0.5%. Off of that, again, really, kind of looking at this trend line here, this breakout point here. We know that there's a lot of overhead at $34 that we want to keep an eye on. But really, I don't think anything has changed, for me at least, technically, within this real estate sector. As long as we really hold this point, I will be looking at it through bullish eyes for bullish opportunities. At least that's how I will be going about it. And lastly, over in communication services, they actually were able to string another win here today. So nice to see. Again, much like tech and maybe even better, example would be the discretionary sector. It's got to do a lot more than what it's done to get me on board with it right now. I still overall I'm looking at this as a retracement opportunity. We're continually making lower highs and lower lows, and we have been since the inception of this ETF. Why is that mysteriously going to change today? Maybe it will, but I have no reason to believe that's the case. We're in the upward swing. We're definitely seeing some money come back into these things, but again, as they into the stocks, the Facebook and Google in particular, because they're so heavily represented in this ETF. Let's see how they play out, right? I still have a hard time thinking that there's anything but overall bearish opportunities as you look at a chart like this. I'll never be the guy that buys down here and looks like a genius if this is the bottom. That is never who I will be. So, as you can kind of see, kind of a little carryover day for the most part. I think we have some interesting potential development over in materials with that breach on the intraday. But for the most part, from a sector point of view, really, I don't think a whole lot changed here today. A fairly uneventful day overall, in my opinion, in the stock market. Over in the dollar, really, I can't say the same thing. Really building off of that momentum from yesterday, kind of taking out that previous resistance level and working pretty darn close to our previous level of resistance, our high point back through here. Obviously, I think you're looking at this through bullish eyes. It's showing a ton of strength overall. We have to respect that resistance level, I believe. I believe you should always respect resistance. We're getting fairly close to it. We have a little room between here and there, but I do think that's an area that we want to keep an eye on. Again, as long as we're kind of holding in this trend that we're in, and maybe this trend line's not going to be perfect, but it'll kind of illustrate kind of the trend that we're working with. I think if you're a trend trader, at least, I think you're looking for bullish opportunities or waiting for something new to develop if you want to go bearish within the dollar. Still showing a lot of strength for sure. About to potentially, at least, not too far away from challenging resistance. Saw some downward movement. Of course, the dollar, really strong day, and it kind of impacted the metals market. Gold and silver both down on the day. Gold kind of closing right back on that old support zone. We're kind of smack dab in the middle of the range. But again, I could understand, especially if we break this zone, and I guess that would be up to your individual trading rules. And I don't think it's a great setup. I think you could make an argument, though, if it does fit the rules, that there is some downward, short term opportunities. Kind of like we saw in silver yesterday. For me, though, I really think that I'm going to continue to look at it as neutral and just wait for it to decide what it wants to do with itself. In the broader sense of things, I'm not going to try to really swing trade it within this trading range. I don't really love to do that stuff. Definitely some interesting intraday opportunities for sure. But we did kind of close right at, and again, probably depending on your rules, you might, I think some people would probably argue that we closed below it. I think it's, you go with what's most likely, and I think most people would say it's kind of right there, So I don't think I would call it a break of that zone. But it definitely got there. There's no doubt about that. Silver, very similarly, continuing that downward movement. So this is, again, you kind of look at this chart, it's overall kind of that same sideways situation. And I understand why people are potentially taking bearish trades in here too. So I wouldn't fight it on gold if that cleanly breaks. Silver, I think we had a little different situation because we kind of put in that high, a new lower high, and then kind of got some signals. A little easier, although I didn't do anything with it, so I don't think there have been enough signals to trade personally. Looking at 14 kind of as that, psychological level of support. We're about there. It's, that's about where we, bottomed out back through here. So it's gonna, that should be a tempting price from a bullish point of view. Obviously, our support level down here would be really the bear signal, in my opinion. If we were to break support down here, that would be a fairly bearish signal in my mind. We have to get through this support level, the nice round 14, and of course the actual support level down here for that to potentially happen. But hey, we're closer today than we were yesterday, right? Honestly, though, much like gold, until we get a clean break, I will be looking at it through neutralize myself. Over in the natural gas market, volatility remains high. We did see some, nice upward movement today, not able to carry through though. I do think you can kind of start to make a case that 4 is support. I mean, it's already a nice round number. We've seen it bounce off of that. We did see some nice upward movement off of that here today. I think for me, at least, I'm going to kind of call 4 the number as kind of the current level of support right now. It still remains very volatile. We're seeing big candles back and forth. I wouldn't dare bet against it by any means right now. But I don't really think it's looking, again, maybe we can, do nothing overall for a few more days. Maybe this will change my mind. But right now, I don't see a great swing trade on natural gas, although I wouldn't fault anybody who's been trading into a bullish because of its overall strength, as long as they were comfortable with the risk and all of that fun stuff. Lastly, over on crude, we were able to build off of yesterday's, I don't want to use the momentum because that's maybe misleading, but we were able to bounce off of yesterday's low at around $50. For me, obviously, running back into this area up in the 54, 50, 350 range would be, ideal for a potential bearish retracement. I don't know that I'm going to get that or how fast we kind of got it back here. It just happened very quick. If you aren't a day trader, it's kind of difficult to maybe get into. I'll still be hoping that I can, of course, get into that. Also, I do, we now have 3 days of kind of that intraday support level that has developed at $50 or the $50 mark, approximately that nice round number. A break below that, I do also believe would be a tradable signal. So much like last time, I think you're looking at, again, you might be looking at it as a bull. I just don't understand why you would be. But if you're looking at it from a bearish point of view, I think you're basically either hoping for a retracement into that approximately 54, get some signals and work back down, or kind of plays out like last time, looking at the break of this little mini floor of this $50 mark. I mean, there is not a ton of support. You hear it a lot. I know Matt and Tim are talking about it in halftime reports today. Where does it end? There's just not a lot of support. If you look at this on a weekly time frame, there's a lot of areas where it's been before that could ultimately end up acting as support, of course. But really, if you're thinking about where's the next major level of support, I mean, it's $43 in that general ballpark. If that 50 can't hold, you'd have a hard time getting me to want to be bullish on crude right now. I'll just leave it at that. So, of course, I'm not alone there. I've yet to hear any bullish argument for crude for quite some time. So that'll do us, ladies and gentlemen, for today's market recap. One of those days, and I don't really mind those days. Those days are okay where not a whole lot changes. That's all right. We've been dealing with a lot of volatility in the market lately, and so a boring day never hurt anybody from time to time. But really not a lot has changed, at least in my mind, technically, as we look into the second half of this week. As always, it is certainly my pleasure, and I certainly do appreciate everybody's time. If you haven't already, be sure to subscribe to the channel and hit that notification bell, and be sure that you're following us over at Tackle Trading on Twitter to keep up with some of the things that we're finding interesting throughout the market day. If you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up to let us know that it's helpful and that we're on the right track over here. With that, ladies and gentlemen, as always, it is my pleasure. Happy trading. Get out of here, and I will see you in the next one.